Okay, hello again, and today is the 15th of March 2017 and we're awaiting with bated breath the United States inflation report from the Bureau of Labour Statistics, and we're going to see what's going to happen with regard to my inflation models and to see whether or not they are going to predict and forecast inflation accurately. And as I showed briefly in the last presentation, I showed 5 models, quantitative models, using the oil price to forecast future inflation trends. And basically here are the last 2 results for the actual inflation figures for December and January. Obviously February's and March haven't yet been announced. I'm showing these greyed out figures because they're actually part of the model, but it just shows whether the model is matching the inflation figures that we've had over the last couple of months. And because they're not perfectly quantitative matches, obviously there are going to be a certain amount of error in these models, but we have fairly consistent forecasts for inflation for this month of between 2.6 and 3.4%. Most of the models are giving about 3.2% inflation for February of 2017, which will be announced later today. So that's going to be a really good test of the models. And the models that predict 2 months ahead are looking at perhaps even slightly higher inflation in the mid 3% for March. But when we get the results in for February, we're going to be able to modify the models a little bit if necessary, because we don't really have a lot of upside data yet. The oil price has only been really rising sharply since about January. Essentially, the year-over-year oil price and energy price changes have only been sharply positive in January and in February, so we don't have that many data points yet for this current cycle. So basically we are looking possibly for, our average forecast is 3.16% for February inflation, which is announced later today, and perhaps 3.44% for March's inflation, to be announced in mid-April. Now this is really going to depend upon how much delay there is between the wholesale oil price that we're using as a predictor and retail energy prices and overall retail prices, which actually go into the CPI. And here's an example. This is model 7, which was the geometric oil model, which gave slightly lower forecast than some of the others, and this is because the geometric model, which is similar to what I think the BLS use for their inflation calculations, is a little bit milder when it comes to the extremes. It sort of smooths out the extremes slightly. So this model currently is forecasting 3.06% inflation for February, to be announced today, and 3.20 for March, followed by a fall into the 2.6 region in April. Now it might actually be, of course, that the oil price data and the oil price changes might take a little longer to filter through, so part of the oil price change filters through and a little bit of it is delayed. But we reckon on about a 1 month delay between major changes in the oil price and major changes in inflation. So we're looking for basically a 2-month spike in inflation, and today's figure to be just over 3 and next month's to be also just over 3. And the data here that we're using is the actual US CPI data, okay, which goes up at the moment to January's, and these are our next 3 months forecast figures for February, March and April, using oil price data which we got from the US Energy Information Agency. Please visit our websites. There are plenty of articles on inflation, on the gold price, on hyperinflation, on the oil market, on commodities, stock markets, technical analysis and various things. There's an 8-year archive on this website, and also there are paid reports and free reports too, much more up-to-date reports perhaps, available at www.patreon.com/Bellamy Research. And of course I need to mention a disclaimer that this is for educational entertainment purposes only, and it's not financial advice or a solicitation to buy or sell any financial instrument or commodity at any time. And investors of course always have the opportunity to do their own due diligence and to consult a qualified financial advisor before making any investment decisions. So thank you very much for watching this short presentation, and I hope it's looking like spring here. Things are looking very nice, and we're again still expecting winter and spring inflation to sprout and grow in early 2017. Thank you very much for watching, and I hope you have a good day.